Do you have to pay any tax on sale of property or investment of your shares? The UK tax system may seem much complicated for newcomers. However, once you understand what taxes you have to pay, it becomes much simpler. In the UK, there are 6 different types of taxes. Let's quickly go through these, and at the end, I will let you know what you can expect from this tax series in terms of tax planning and tax compliance. The UK tax system may seem much complicated for newcomers. However, once you understand what taxes you have to pay, it becomes much simpler. Income tax is a single largest sources of revenue collected by government. The second largest sources of revenue for government is national insurance contribution. The third largest sources of revenue for government is value added tax, and fourth largest source of revenue for government is corporation tax. This is tax planning series. Before moving forward, please bear in mind tax planning is not just and only mitigating your tax bill. However, it also includes maximizing the tax benefits under available tax laws. And in fact, it also includes looking ahead, making decisions, and responding to the tax issues you or your client may face. So please do not expect in each video that I am going to give you some magic tips and tricks which helps you to reduce your tax bill. To be honest, there is no such thing in tax world, and if somebody is offering you some magic tips and tricks, you are free to switch. Now, you must be thinking, what the purpose of watching your videos then? My goal is to deliver a tax matters in a simpler and easiest way so that you can understand that and align your tax affairs accordingly. Secondly, as you may know, there are 2 pillars of tax planning. One is obviously managing your tax bill by utilizing available tax reliefs and benefits. And the other one is tax compliance. Although mitigating your tax bill is important, however, it is critical to comply with HMRC tax rules and regulations. So I will posting some practical HMRC compliance matters that I recently dealt with. In the UK, there are 6 different types of taxes. Let's quickly go through these, and at the end, I will let you know what you can expect from this tax series in terms of tax planning and tax compliance. Number 1 is income tax, which is paid by individuals on their earnings, which includes employment, self-employment, investment income, and rental income. Secondly, employed and self-employed people also contribute national insurance contribution, even though it is not a tax, but still we will see some aspect of it. Now, let's just say you are operating as a self-employed or as a limited company and your turnover is £80,000, and in next 12 months you are expecting 15 to 20,000 increase in your turnover. Here where the next tax jumps in, which is value-added tax or VAT. As per HMRC rules and regulations, if your turnover is more than £90,000, then you must register for VAT and pay VAT on your revenues. Now, it's been 2 to 3 years. You have been working, your revenue meet all your expenses, and now at the end, you're left with a net profit of £20,000. You already paid income tax and national insurance when you were self-employed, and from your company, you have paid PAYE on your salary and national insurance contribution on your salary as well as on your staff salaries. On top of this, you already paid or you have been paying VAT on your revenue. Now, you must be thinking you don't have to pay any tax, right? But this is not true. Here, where the corporation tax comes into the game. Corporation tax is paid by limited companies on their income and gains. You have a 20,000 profit, so you must pay 19% of corporation tax on it to HMRC. What if you have a property and you want to sell it, or you have invested in shares, let's say for Facebook, Apple, Tesla, or Amazon, and you are getting a good price on selling of these shares. Do you have to pay any tax on sale of property or shares? Yes, of course. Government does not let you enjoy whole money. They must take part of it in form of capital gain tax. Now, your business is flourishing and you are securing some amazing deals. At the same time, you are investing in properties and exploring some new business ventures. You started worry about your state and thinking about how you can pass your wealth to your children and to grandchildren in more safely and securely and obviously tax efficient manner. Here where trust and estate planning plays a significant role. It's been 20 to 30 years now. You have been working and now slowly and gradually you are getting old. You want to give your property to your son. However, someone told you that before gifting it to your son, you have to pay some kind of tax on it. Over the course of last 2 to 3 decades, you have accumulated over £1,000,000 into your bank account and now thinking about to make a transfer to your 2 sons and 1 daughter. You are thinking about all the taxes you have paid during the course of your life, including income tax, national insurance contribution, VAT, corporation tax, and capital gain tax. Presumably, I already paid all of these taxes and now transferring my wealth to my kids and grandkids, I don't have to pay any tax, right? But that's not true. Government is not kind-hearted to let you transfer your wealth to your kids and grandkids without charging a tax, even though you have already paid all of the taxes during the course of life and this wealth that you have accumulated is net of taxes. Here where inheritance tax comes in. Unless you did a financial planning during your life over 2 to 3 decades in form of trust and estate planning, you will receive a big tax bill in form of inheritance tax. In this tax planning series, my aim is to start from income tax, in which I will explain tax planning and tax compliance related matters and slowly and gradually explain all the other 6 taxes. I hope you will enjoy it and please keep me posted if you may have any questions. As always, hand ahead salute until the next video.